You soon could be getting a little relief when it comes to paying off your debt. That's because the Federal Reserve is forecasted to cut interest rates this week. The two-day interest rate meeting begins Tuesday, with the Fed's decision set to be announced Wednesday afternoon. Economists on Wall Street nearly universally agree that the Federal Reserve will cut rates, something that they have not done since December of last year. If that is indeed the case, it would likely satisfy President Trump, who has blasted Federal Reserve Chairman Jerome Powell for not cutting rates at all since Trump has returned to the White House.
He's incompetent. The Fed chairman's incompetent.
The meeting comes at a pivotal time for the economy. Consumer sentiment is down. The cost of living in some sectors is up. Meanwhile, the job market for many has slowed. While interest rates are usually kept high to prevent or lower high inflation, economists are expecting a cut because inaction by the Fed, many believe, could do further harm to the economy. Chairman Powell's Wednesday press conference about the economy is expected to provide more clarity as to where the Federal Reserve believes our economy may be heading, with the possibility that Powell could indicate how many more cuts he could see on the horizon the rest of the year. Now, late Monday, an appeals court did rule that Lisa Cook, who President Trump is attempting to fire over accusations of mortgage fraud, that court ruled that Cook can remain on the Federal Reserve during this week's meeting. It will also be the first Federal Reserve of a newly appointed member of the board by President Trump. Now, the forecast for the interest rate cut is only 25 basis points, 0.25%. That's not really much, so don't expect drastic changes when it comes to your bills or 30-year mortgage anytime soon. Joe St. George, Scripps News Group, Washington.